Now we move on to the final section on equities, risk, asset classes, and fusion analysis. How do you evaluate equities? There's many different ways and approaches. Each one has its advantages and disadvantages. There is no one way as to a process. There's many different views of what the future will be like for the economy, different interpretations of data. And different people have different objectives, and they may see things differently as a result. What I'd like to share now is what I use, and it is becoming more prevalent throughout the investment community today. And that's called fusion analysis. It merges fundamental, technical, behavioral, and quantitative analysis. So it looks at a lot of different approaches and puts them together, saying it isn't just one. So when we look at this analysis, we start with the macro. And the macro being what is happening in the world today. It's based on it when you went through that economic background that you read at the beginning of the class, those factors coming together, interpreting that. Fundamental is what we've been studying for the past few weeks is to the performance of the firm. Where is it going? Then we move to technical analysis, which is statistically based on prices, volumes. And then there's quantitative, which is using using math, formulas, algorithms, and the rest to evaluate where the company is going. So let's just take those pieces and go a little deeper. Macro analysis, will the market go up, will it go down, or stay where it is? What's your view of the economy, growth, politics, what's going to happen? If a large number of investors believe that a nation is entering recession, their actions can affect the direction of that stock market, pulling back. Economic conditions, we talked about this, the employment, inflation, inventory, consumer spending, influence the potential profit of a company and therefore its future cash flow and stock price. Government actions, whether that be fiscal action, the government spending money, taxes, policies, etc., or whether it's monetary policy, interest rates, etc., how those things will affect the price of a stock. That's the macro. Global economy, change in foreign exchange rates, tariffs, diplomatic relations can cause stocks to go up or to go down. Now, these macro factors, how do they impact the firm? Their impact on the sales volume, what you sell, back to the drivers. Impact on the sales price, supply and demand. And then the impact on costs. And together, they will impact the profitability of the firms. Fundamentals, this is what we've been studying. Actual results and forecasts. You study the 10K and financial reports. PE ratios are often used. They look at historical, prior year earnings, forward, projected earnings per share over the market price. What is the market paying for these future earnings? The next one is technical analysis. And that's charts and graphs, and they're statistically computed. You look for buy and sell opportunities, convergence and divergence, convergence and divergence. The trend is your friend. What's trend? How long is it? This is the point of view. Trends do reverse, but trends tend to continue on. We look at a couple of major technical analysis. This is the basics that we use. A 50 and 200 day moving average. What it is it takes each stock price over the past 50 and 200 days and runs an average on them. From that, we can see two things. One, we can see whether the stock is in an uptrend or a downtrend. It tells us, is there support or resistance? We have average volume, high volume, low volume. What's happening? Is a lot of shares being traded? Is the trend up? We look at relative strength index. And that's a momentum oscillator, and it measures the velocity and magnitude of directional price movements. And when we look at it, momentum is the rate of rise or fall. Is it going up? What's the velocity by which it's moving up? And it's on a scale of 0 to 100. 70 meaning the stock is overbought, and 30 is it's oversold. Now these are just indicators. Okay, let's take a moment now and take a look at some of this technical analysis. Search, and I'm just going to put in STLD, mainly because that's the one I've been working on. Any symbol will do. We'll look at a couple. There's Steel Dynamics. When we come to the chart, we see that it is a line graph. So the first thing we're going to do is we're going to change it to candlesticks. And candlesticks, let's just make this 3 months so we can see a little better. A candlestick tells us when if it's green, it closed up for the day, and red, it closed down for the day. So these are called candlesticks, and we can see the movement within the day. So the next thing we'd like to add is some events. So what we want to add is some simple moving averages. So the first one that comes up is 50-day. I'm going to add in 200-day, and I'm going to close. And what we can see is that when we started out 9/20/19, that it opened at 30.72 and it closed at 30.35. The simple moving average is 29.43, which is the dark line on the bottom, and the 50-day moving average is the other one. So what we can see through looking at this is the blue line that runs this way is the 50-day. So it is. So what we can see is this line right here is the 200-day moving average, and we can see this line here is the 50-day. So since September, it has been running below the 200-day moving average. And finally, here in December, we're seeing it go over the 50-day average. So if we were to put it on, just say, a 1-year basis, what we clearly see here, this is easier to see, is we have seen that over the past year, the slope is downward. So the 200-day is going down. Most of the data points have been under the 50-day. And we're seeing that starting in October, it started moving up. So we're seeing the short term a positive trend because the 50-day very weakly is going up, and it crossed over and it's slightly above. Now, when we look at it from here, as we're looking around it, it was hard for it to go over 50. So that sort of was its resistance going over. Here, we see it provided some level of support in the market. We look at it on a 3-year basis. Again, we've seen an upward trend, and then we see it coming down. So we could say here we've seen very positive slope, and then it started going down, 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 and all of the data was below the 50-day moving average. So that became resistance, where here it was support through that point of time. So when we look at that, let's add in and say, well, what happened with earnings? So if we click on earnings, we can see that here's earnings, and that the stock did not react too much to the earnings when we look at that. So that is one thing that we can see fairly easy. And let's add in a couple more things. So let's take the lower charts and let's add in relative strength index. And I added that in. And what we can see here is this is on the basis 0 to 100. And we can see 70 would be up here. And if we look down here, there's 100, there's 0, so that's not as strong as I'd like. So we can see that the relative strength index, so I added in the relative strength index. And if we look at it today, the relative index is 60.37. 70 would indicate that it's overbought. 30 would be it's oversold. So it's having a positive buying. So let's add one more in on the lower charts. Let's bring in the volume. And if we bring in the volume, we can see that if we put, I'm not going to put a trend line in, but we can see it's pretty consistent. That the biggest volume day was when earnings came out back in 17, and it went positive. But when we can see at times, when we look at the relative strength index here, that there is times that it's been oversold and times that it might have been overbought. So these are just technical charts that take that. So now let's put in a couple of other symbols just so that we can see what may be happening. So let's put in FANG, which is Diamondback Energy. And we're going to go the advanced chart once again. Let's see what stays. We're going to make the whole thing again. We're going to take it, make it candlesticks. And then what we're going to do is we're going to add in a 200-day moving average. And let's add in the events. Let's put in earnings. And then for the lower charts, we're going to put in a relatively strength index. And we're going to put in the volume. So as we're looking, we once again start out with the 200-day being 121.80. So the 50-day has been below. But look at it, just keeps going down, down, down. The trend is down. If we look at this, now that's a year. Let's put in what's happened in 6 months. And you can see that this is forming, this line here is forming resistance. It can't break through that line. There's resistance there. Okay, so we can interpret that. If we look at it right now, it does look like it's relatively strong. So that's how we use the charts. You can put in yours and we look at trends. Are there ones that are better? Sure. Let's put in Apple. Let's see how they've done. We go to advanced. And first thing we're going to do is change it over to candlestick. And we're going to do it on a 6-month basis to see how it looks. We're going to add a period, a 200-day period in. And we already have the volume in, and the relative strength did stay in. So what we can see here is that the 50-day, this line right here, is trending up. All the data points are above the trend. And this 200-day is going up, and the 50-day is going up. So we're an upward trend in Apple. Volume, fairly normal. We look at relative strength. And again, we're to the point that it's probably close to being overbought. But we can see a positive trend. We put that on a 3-year basis. And again, we see a positive trend. In December of last year and into the beginning of the year, it dropped down, and there was support at the 200-day level. So this is a basics of charting. Basically, you look at it at candlesticks, you look at a 50-day, 200-day, you look at what the volume is, and relative strength. So that's what technicians do. There are so many different studies we could put in, and that's for another class. Quantitative analysis now can be done for a number of reasons. Measurement, performance evaluation, valuation can be used to predict real-world events such as changes in share price. It uses complex mathematical and statistical modeling, measurement, and research. It assigns a numerical value to variables. Quantitative analysts try to replicate reality mathematically. It's a powerful tool for evaluation of investments, but it rarely tells a complete story with the help of its opposite, qualitative analysis. In financial circles, quantitative analysts are often referred to as quants, quant jockeys, or rocket scientists. It's used in conjunction with that. As investors, we can find out a lot of this information based on where we get our information, whether that be from a third-party provider or whether it comes with our trading platform that we are on.